So good morning, everybody. I am pleased to welcome you all to the Working Group 3 webinar. In the Working Group 3, we focus on finance and banking. We are the members of the China in Europe Research Network. And today you will hear about China FinTech developments, links with European financial players. Today we have an honor to welcome Mr. Greg Au-Yeung. It's a practice-driven presentation, which would certainly inspire many of us towards interesting collaborative research projects. Greg, we are very pleased to welcome you. It's our honor. I will make a brief introduction of you, Greg, and then I let you tell more about your background. So Greg Au-Yeung is a senior banking executive with over 30 years experience in Chinese and international banking, both in Asia as well as in Europe. He's currently a senior advisor at the Shanghai Fudan University. And he has also recently launched a YouTube channel. You will learn about the YouTube channel directly also from Mr. Au-Yeung. It's a very inspiring channel for both practitioners, but also for us scholars. We can learn a lot and get interesting and insightful data for our research. Briefly about myself, I'm Lupina-Wegener. I am a committee member, a Swiss management committee member, and I do my research on cross-border mergers and acquisitions, European acquisitions in China, Chinese acquisitions in Europe. I'm also interested in terms of research to understand internationalization of Chinese technology firms in Europe, and also European technology firms in China. I'm a professor at the University of Applied Sciences, Western Switzerland. And I'm very happy that we can all meet today for this practice-driven presentation on finance. So we will have about 30-minute presentation. And afterwards, we can move to a Q&A session. The Q&A session will be organized according to your interaction preferences. You can write your comment in a chat box, but you can as well raise your hand and ask your question directly. So again, thank you, Greg, for being with us, and thank you all for joining us at this session on Chinese FinTech. Greg, floor is yours.
Thank you, Anna. Thank you for the introduction, and the honor is all mine. Actually, this is the first time that I presented CHERN, and I would like to make use of this 30 minutes to just give a very quick introduction, and then try to allow more time at the end, for interaction. Okay, so let me try to make this work first. Can you see it?
Perfect.
Okay, so well, China's fintech industry did not start from a vacuum, and obviously it is driven by a lot of different factors as we see today, but it was largely historical development, local culture, market condition, and the like. Some are similar to the West as we see it, and some are not, and some are quite unique. And today I just would like to share the China FinTech's past and present, and also explore some of the future with you as well. I'm not gonna, I can skip this. Well, Anna already kindly introduced, this is my YouTube channel. Feel free to subscribe it, it's free. Right, in the FinTech market, it's really mainly driven by three major factors. There's a market condition, of course, it's gonna be a sizable market in the first place, the number of customers to use it. And then also next is the access to capital, and finally supportive regulations. And today I just mainly touch on 1 and 2, this sizable, the market size, and also the regulations behind this FinTech market. Let me just dive right into the financial regulation in China today. this slide can show you on the left-hand side, purposely put it black and white. So this is the traditional financial licenses that you see today in the market, in the most Western world as well. Banking, you need a banking license. You just have a trust company, you need a trust license, insurance company, etc. So every country is different, and there's no different in China. So traditional, this type of license has been around for like 3 to 4 decades since the reopening of China to the world. And then on the right-hand side, you see the blue part, the financial licenses, what we call the online license, is actually has been launched about 10 years ago. This is all brand new, and because the regulator tried to address the market, and with some new kind of online licenses issued to these players. So what it means is that all of these companies, if they sell insurance or if they sell loan, etc., they have to be online. There are no branches, okay? So that's the major differentiation between the old one and the new ones. And also, obviously, in terms of the criteria, the capital is a bit less stringent than the ones on the left, okay? And then on the bottom right-hand corner, you see the green part. I purposely put it here because these are the financial software providers, like software companies. So this, you don't need the financial license, right? Because financial license is very hard to get, and it takes time and it takes capital. And as a business license, of course, you need capital as well. But all you need is to go to a Minister of Commerce and get a license. And usually it's a very clear cut, okay? And it's much less hassle than in the financial industry, okay? And then from the regulators' perspective, they purposely, I think they have been reiterating for a long time what FinTech means to the financial world. When you set up a FinTech, the purpose is very simple. They highlight in the 4 points here. It has to promote the financial industry transformation. That means they have to upgrade the financial industry as a whole. And then they have to service the real economy. Real economy, of course, is a brick and mortar economy, the actual economy, not speculation. So this is actually a very important point highlighted by the regulator. And then it has to promote the financial inclusion. So as you can see, for the last 10 years or so, the P2P emergence and all this new form of financing actually arise in China is to address the financial inclusion. Because even up to a few years ago, I think the statistics says that there are about 220 million underbanked and underserved population in China, and then plus the underbanked and unbanked SMEs, so the commercial entities, small micro enterprises that are not funded by traditional banks, and so they usually go to loan sharks and the unregulated channel, which is not good for the economy. So that's why the promoting of the financial inclusion is a very important policy for the regulator. And the last point, of course, is an obvious point. Guard against financial risk is to minimize that using the financial technology as well. And this slide is a bit busy, but let me try to explain it. On the left-hand side, the vertical part, on the far left-hand side, the blue boxes. So these are the different stages of the, I would say the timestamp of the Chinese regulators or the Chinese market evolving through time. So for example, when they started to reopen the door to the world by Deng Xiaoping, the late Deng Xiaoping, 1978 or so, the government modernization program already identified a few of the pillars of the Chinese economy is to move forward in the modernization program. One of them is science and technology. So on day one, they already identified that. And that's why there was a lot of policy that's surrounding that in years to come. And the second stage is the 1990 to 2000 or so, about that 10 years, bank has been reformed. A lot of the new banks actually came out, like Bank of China, ICBC, all these big banks did not exist, before 1990s. And there was through the different reforms and creating this, all types of banks around that time. And then the stock market was reopened or opened in 1990. So all this is actually very new to the market. And then the mutual fund companies emerged, and same as the insurance sector as well. And then around the same time, the technology companies have been set up big time in China, across China. And that's even before the internet age. I think there's a lot of like Tencent and all the companies started, and then later on took advantage of the internet boom, and then emerged as a technology powerhouse. And then same as around that time, a lot of the, I would say the infrastructure companies building the network, the phone networks, and then also a lot of the phone companies and also a lot of the other software company also leveraged that boom as well during the 1990s. And then moving on to around millennium, the 2000 and to 2010, I think this is what I call I think they're shaping up this so-called the FinTech in China at that time. And then you see and then after that, it was the 5G, electric vehicles, smart cities, FinTech ecosystem all emerge. And so we go to the horizontal lines in here, the exploration stage all the way to reset. So all these different stages have all the different emergence of companies that set up in China. So Alipay is obviously the dominant one because they were the one that set up the first online payment company in China. And that was through internet, not even cell phone at the time. And to solve the payment problem for the Taobao, the online purchasing system, like the equivalent of eBay. And then around the same time, you have the credit ease that brought in the P2P concept to China, and blockchain as well. Around that time is the very early stage, the infancy stage of all this technology. And then when the market emerged, a lot of the other companies emerged. So consumer lending, for example, the government actually issued a new consumer lending license that's not online, just offline, the brick and mortar consumer lending company to address the needs. And then other technology company all around emerged around the same time. And you can see it's 2011 that the first payment license was issued to Alipay. And then the rest of the 200 plus came in later on. So it took the regulator around 7 years to figure out what's the best way to address that. Because if you see the Chinese government, usually they would wait and see. They would take a very laissez-faire approach and very liberal and let the market play itself. And then until certain time, until they're big enough, they know, okay, now is the time to regulate it. Then they step in. So, but it doesn't mean they just don't do anything, because there's a lot of things that they have been doing in the background as well. So I'll explain a little bit later on. So all this moving on to the right will be just the different stages where the more online license was issued to the different companies in China. And then finally, around 2019, you got the data security law, data privacy law. It's actually built on top of the GDPR, if you will. It's actually based on a lot of the European regulations. So that's why a lot of the similarities with the China data security law and data privacy law from the European counterpart as well. Now, this is the P2P slide, which from boom to bust. So from 2006, you have the first one, the credit ease that came out. And then around this time, it grew like crazy. And the regulator knows that. So they form a P2P industry association, not to regulate it, but to get all the players around in this sort of quasi-government organization to try to influence it, to try to say, okay, what's the best way to move forward? And they take opinions from the players, and also the regulator will advise them what to do, but they did not interfere. Okay, and but started around 2013, problems arise because there was around grew to about 800 P2P companies with 15 billion outstanding loan in the market, and around 75 in that year collapsed, just went underwater. And then if you move forward, right, the peak is around 2015, where 600 companies collapsed just that year, and it's pretty horrifying, because a lot of people, the retailers, actually invested, lost money big time, and that's why they already started to look into how to regulate it, and then they start to have this financial inclusion development plan to address that, to ease that. And then not until 2019, they come up with the law, the online licenses was issued. So they force all this P2P company into this so-called micro-lending space. They don't want the P2P anymore because it is already proved that it didn't work. And it's created a lot of scandals and so on and so forth. So today there's about 262 online players under regulations, under the online license in China today. And if you want to look at this is the link for the interim measures of the Administration of Online Small Loan Business to regulate this type of companies. And then in China also, there was always some foreign players actually came in. And in 2007, the UA Finance, actually a Hong Kong lending company. It's a microloan company. They actually came to China, and they're not online company, but at least they are the foreign companies. And then Fullerton is actually a Singapore-backed, government-backed finance company, and then Home Credit, of course, is one of the largest lending company in Europe, and become the largest in China. And it was set up around 2008. And then Dianrong is an interesting one because it's a P2P company. It was set up by the former CTO of the Lending Club, which is the largest online lender in US. And the CTO actually came to China, and set up his own company. It's quite legendary. And then around 2015, Adyen is the Dutch, I believe, is a Dutch payment company, came to China, explored the market, and then a few years later, they had the partnership with Alipay and Financial. And then Mosito is, I believe, is a US company, is a payment company, and they actually came to China and bought a PayEase. It's it's actually ranked 37 in China out of the 250 plus payment company, and it's a profitable company. And they bought the company and actually make quite an entry. But unfortunately, they have to exit to 2019. They have to sell the company at the end, not because of the Chinese market or the financial issue. It's actually a financial issue back home. They have been heavily in debt and they've been sued by investor, I believe. And so they had to sell the company. It's actually one of the most profitable company for Mosito. And then Wise is another story. Is actually a Forex company. They just it's more like a retail Forex dealers, and you can actually do money exchange, basically money exchange with this company. And they came in about 2016, explore a market. They actually got the license, but because, as you may know, in China there's a currency control similar to Malaysia or Taiwan in the past, and they have the strict currency control. So the money in and out of the country is not so easy. There's strict regulation, and even though they got the license, to be honest, I don't know what sort of challenges they face at the time, but at the end they still had the branch, but instead they actually partnered with Alipay at the end and explored the overseas market instead of the local market. But if you look at it from that perspective, it's probably right, because unless you buy a local company, which already have the market share, if you have a brand new company just entering the market, it will be quite difficult because it's premature already after 10 years of development. And that's why PayPal did the same thing. PayPal actually bought a payment company last year, and it's ranked 23rd in the country, and it's called GoPay, and it's in operation already in Beijing. So they actually, imagine PayPal is so big, but they still bought a local company for a reason, and it's a profitable company, and so they just try to enter the market and capture the market share. And MasterCard, also last year, they set up the, I believe it's called, what was called this clearing license, nothing to do with P2P or the Forex, but it's actually a clearings and settlement license in China. It's the first foreign company that have that license. So you can see that a lot of foreign companies, this is just a snapshot of the players in the market. And here is the final slide on the regulations. So you can see around 2019, the PBOC actually first have this so-called the FinTech development plan, the first ever in China. In the past, it's like consultation paper and all this, but this time it's actually come up with a plan and what they think the China should move forward to. And after the policy actually came out, on before and after that, a lot of different cities follow suit and they have their own policy. Why they have a different policy? It's not actually different. It's a subset of this policy, and it's according to the individual cities' demand and also the advantage, and they act accordingly. So they could be providing a lot of the incentive for the foreign or local players to come into the city. They want to welcome them to invest in it, and they have set the policy differently. So the incentive could be in investment financing. They could be helping you to finance the company. They could be subsidizing your talent. If you hire the graduates, from the local university, they will give you subsidy, or they can actually even invest in your own company, or or asking other companies to invest in your company. And the research rewards is a big this is a big category in China, because they want to have the innovation in China. So if you have something unique proposition that you invent and it proved that it's not, you didn't copy from someone else, and this quite unique, this groundbreak sort of technology innovation, they'll give you money. So this is not new. I mean, it's been going on for like decades, and especially investment funds, etc. So all this preferential treatment is to purposely to target different type of companies entering that city or province, and they give you the incentive accordingly. And I still remember when I was working at UBS, if you are working in Wuxi, the city I live now, the government, let's say if you have an employee who has a PhD degree, the government actually pay that employee 1 million renminbi, no question asked, and no tax-free. That is a $1 million. Just give it, renminbi. Just give it to them, because they want to lure the top-notch engineers or this research professionals coming into the city, which they lack of, and that's why they did that. Now, the fintech players, if you see at the early stage page on the regulation page, a lot of the different online players in here, and these are all the different type. It's not exhaustive, but it's capture the major license in here. So under third-party payment, for example, issued by PBOC, the regulator, there are about 27 exist today in the market, and Alipay is one of the major players, or probably the biggest player. And the capital here does not mean you have to have that capital to run the business, because it depends the transaction size of your company. But for a big company like Alipay, multi-billion, trillion dollars, sort of transaction every year, of course, you need that capital. And online lending the same. And this is a formerly known as P2P. So from 6,000 P2P company, they converge into 262 online players now in China, and these are and P2P becomes the history. And then you have the digital bank. There's only 4 at the moment. WeBank is probably one of the most well-known, and so this is again this just governed by different regulators in the market. Here is more like an ecosystem or the market landscape, and what I highlight here is on the first on the left-hand side, these are incumbent banks. They have the players to interact with the fintech ecosystem, and they have already launched the spin-offs. That means the incumbent banks actually have created their own fintech spin-off. So the fintech spin-off have 2 purposes in play. One is to become a outsourcing company for the bank himself, so they can access the innovative product from that new setup company will be independent of the company. And then secondly, this fintech spin-off can actually service the financial market. So a good one will be like Ping An. They have a PAO as a spin-off, and they actually service the entire industry, not just Ping An Group themselves. And then in the middle is actually all the different big players. So say Alibaba Group and Financial, for example, you can see this whole vertical market is actually the capture. So from payment, from financing, from savings, from different type of technology, they have that sort of technology suite. So for example, Alipay cover the mobile payment solution. They are also the payment service provider. And then on the financing side, they have also the digital bank called MyBank, and to address the personal lending. And then they also have SME lending through this chain, through the MyBank as well. And then they also have different type of smaller players that address the microloans as well. And then you have Tencent, Ping An, JD, Baidu, all these different have the different set of companies and functions to address that market. And then on the far right, you have the digital banks. It's just a subset of here, because obviously MyBank is part of here. And WeBank is actually part of in the Tencent conglomerate. And then on the far right-hand corner are the fintech software. I purposely put in green because these are you don't need a financial license to operate. You just need a business license. So these are pure tech companies. So if you want to enter China fast without too much hassle, set up a tech company. This is the easiest, because this is the one that you can provide a lot of solutions and to the market or outside China, and then you can set up relatively quickly. Oops. Okay, so in here, what I try to illustrate on the slide is the different type of fintech players have a different, so what I call the players of origin. Say, for example, the Ant Financial, JD Finance, and all these different fintech companies actually coming from what they call the Intech age, because all this company was set up 15, 20 years ago as an internet company, service everything on, as an IT service provider through internet. And so the typical, obviously, the characteristics will be the BATJ, right? Baidu, Alibaba, Tencent, and JD. These are the good representation. And then there are different categories. So the second category is what we call the financial service provider. So Hang Seng is the equivalent of like SunGuard, right? So they service the financial sector with the software. They don't actually process the transaction, but they only sell the software to them, either through cloud or on-site. And same as the Au-Yeung as well, and TCL, okay? And then the third type is the pure startup. Those are brand new entry player, enter China, either as a local or global players, and then they set foot in China as a pure fintech company, right? And then the fourth type is the finance company. So it could be banks, right? Mainly they're actually Minsheng Bank or the Ping An Bank or the Jiangsu Bank, ICBC, etc. So these are the banks that serve the fintech unit, okay? And then the last bit would be all over, but mostly they are from a retail sector, because SF Financial, for example, is the largest logistic company in China. And they also have the fintech unit to address different needs. If you look at the market size today, first to look at the more like a major, the macroeconomics, right? So if you look at this, right, the projection for the, 2021, we all know is the projection about 8.2% economic growth, right, in this year. And then the next year onwards, all the way to 2025, the projection is around 5.5, which is quite a large number if you compare, especially compared to other jurisdictions. And then on this hand, right, on the right-hand side, it's actually just an indication of the stock market. It's a buffet indicator. It states that they expect the annual return would be about 5.2 per year for the next 5 years or so, right? And so it just gives you an indication of the overall market. And then in here is the FDI, the foreign direct investment. It's a big indication that, especially 2020, it actually peaked. And they surpass US has become the largest FDI market in the world. So there are far more FDI actually coming into China in 2020 than US and other countries. And if you break down into different FDIs, it would be the subsector is about 50, can't see it, it's actually 50+%. And then the high-tech sector is actually quite in the dominant position because it's all 30–40%. And these are the investment into, could be setting up a tech company, who could be investing, or it could be like a VC investing in the fintech space or into banks. And all this is actually in the high-tech sector. And in terms of the fintech market growth, right, this is, again, it's just an indication. In 2018, it's probably it's a good representation, but it's also may not be entirely, correct, because it's actually is a substantial share of the, I'll say the fintech investment is in the APAC region. And out of the APAC region, most of them actually come from the Ant Financial Series C investment. And quite a few big sort of M&A also took place during that year. And it took a dip in 2019. It is a rebound of US and UK with the substantial investment actually entering the US and UK market in 2019. So this may not be the good representation, but it just gives you an indication that when it bounced, this could be a quite substantial marketplace to be in, because just Ant Financial alone, you raised 14 billion, Series C, and that's why there are more and more sort of Ant Financial equivalent coming into play in China. And here is the mobile payment market in China in 2018. And in here, all I would like to address as a message is the market size. The total transaction size is around close to $30 trillion, okay, in China alone. And if you look at the market share is captured by Alipay and Tencent, right? Tencent WePay. So these are, the dominant market. But if you look at the other smaller players, just think about 0.5% or 1% of the market share. That's 300 billion, not million, it's billion. It's a huge market, and that's why PayPal came in. That's why the all the other European company would like to have their eyes on the payment operator because it's profitable, and also each of this owner is different. Let's say Hebao is actually owned by China Mobile, so they target different segment. They don't need to compete with Alipay or WePay. So, and also China is a big country. You could actually position yourself just at one province. You would make a lot of money if you just target one particular segment that Alipay does not dominate. Then you're there, and that's why each of the company have their own network of influence, have their own sort of market share, and that's why they would leverage their own sort of network to capture that market, different from Alipay. So now is the property opportunities of FinTech. I need to go through quickly. What I can see is that the foreign companies coming into China, Goldman Sachs, BlackRock, all this coming in, right? So you can support the foreign firms in China. So if they set up in China, if you have already have a relationship with them in Europe, you should go with them, right? So they're more than open to explore that opportunity. You could also target those companies actually outside, the Chinese company going overseas, the other way around. So payment company and financial, they still have to go overseas, right? But when they explore the overseas market, they need partnership, right? It's not their home ground, it's your home ground. So obviously, this would be an area of collaboration that you can do with a lot of the other FinTech companies. And don't forget the financial institution as well. The brokers, the Chinese brokers, the banks, all these are going overseas as well because they need to have their establishment overseas. And Hong Kong is a battleground, right? But they could go beyond that Hong Kong and they could go to Europe as well. So that's why I think this could be one target segment. And then you can collaborate with China FinTech. Let's say this is a good example. At the end, the Dutch payment company, they decide to join force with Alipay. And so all of the Alipay transaction outside is carried out by IDN. So because they have the home ground advantage at the end, because even though they're Dutch, but they know the European market very well. So Alipay will delegate this responsibility to them, right? Another way is my previous company. This Stock Connect is just in China is capital control. So Chinese investor cannot just invest in U.S. stocks or other jurisdiction. So the only channel you can go outside China is the Hong Kong, the northbound and southbound. So Chinese investor can go through what we call the Stock Connect mechanism and invest in the Hong Kong Stock Exchange. Okay, so this is already happening for the last couple of years, right? There's only one single channel. But if you want to invest in US, what do? You partner with someone else. So this is what Weibo came in. Weibo is a pure tech company in China, set up in just a few years ago. And they partner with the Saxo Bank because they have the customer base in China that want to invest overseas. And Saxo Bank has the close to 100 stock exchange connectivity outside China. So they partner with Weibo so that Weibo customers can invest in US stock market through Saxo Bank. Okay, it's like a private label, white label solution. And the UBS want to already plan to set up the first digital bank in China. UBS already have a big dominance in China. They probably have the full license already. They have the bank, they have the wealth management arm, they already have the asset management arm as well. But what they don't have is a digital bank because it makes sense for them because foreign bank usually in China, what they don't have is the client base because they don't have so many branches like ICBC. So obviously they don't have such client reach, and online play would be one channel for them to break that sort of barrier. And that's why if you set up a digital bank, everything is pure online, it will be a level playing field with WeBank and other incumbent banks. And that's why UBS is quite eager to get that license. PayPal already mentioned that. And the home credit, I think, is a good story because they actually invested in it. It's more than 13 years already. And then they now are the most profitable consumer finance company in China. They beat all the Chinese players as well. And they already heavily invest in China. And they even moved, the technology center, operating center in China as well. So I think this is a demonstration that it could be profitable. But if you're willing to take the chance and take the time and effort. HSBC set up the the first fintech company, the first foreign fintech company in China, and they just announced a couple of months ago. So this is it's going to be interesting because they don't need the financial license to set up that, because this is just a tech company, an outsourcing company, and they already have the outsourcing company in China. They have an offshore development center in Guangzhou. They have already more than 10,000 people supporting the banks worldwide, but they want to have the fintech play because they want to capture that ecosystem in China, and which at the moment they are not. And that's why I think it's going to be very interesting to see how it plays out, for HSBC FinTech in China. And here is another thing that people need to watch out for is there will be a deregulation in China in years to come. And cloud, for example, is not allowed in China. It's you can set up your private cloud in securities market, for example, but you cannot use your trading system, for example, on public cloud, right? So Saxo Bank, for example, my previous company, I already did that in Denmark and other countries. And when we talked to the regulator actually welcomed that idea. They know it's coming, but they don't know when to switch on that button yet. So they actually are eager to learn from the Western players how they use technology to disrupt the market. And that's why they've already been thinking about all this along, and they know the market very well. I mean, I'm quite surprised that the local regulator actually know the technology pretty well. They know what's going on, but when it's going to be decided, we don't know. So that's why I think it's very important to understand what's happening with the regulatory market and what's happening in the market, and then get ready for it. And BAS is the same. Banking as a service is the same. The brokers, for example, is not allowed to outsource the technology to another company, unlike like Saxo Bank or other banks and many other banks in outside UBS, and they already did that. So and the final point is the capital control and digital yuan. All this is coming. So I think people and companies need to be aware of what's the impact. Some of them may not be so straightforward, but I think you need to keep a tab in the regulatory environment to find out. And also best is to partner the local players. If you have a branch in China, the best is to talk to the regulators and the players as well. And this is invest in China. That's another possibility. Most of this are dominated by Chinese VCs. Only a few are, a few of them big ones are actually American, but I don't see that many European VCs actually active in market. But whether or not it's possible, I don't know, but it's certainly worth exploring. So I guess the conclusion is that the future, I think, is promising. I can see that a lot of investment coming into the market, a lot of R&D spending from government and in the industry, and it's a sizable market already, and it's only going to further open. It's not going to close. And the talent pool is big in market, and they're not just local, they're more overseas coming. Even scientists, some of the Japanese scientists are moving to China because their lack of funding in Japan. So you can see that they're attracting a lot of the players in the market. And according to HSBC research, I think it says that China is the second largest market to attract foreign talents to come, to work. And that's a surprise to me, but anyway, grads pipeline every year, there are 9 million grads a year, so it cannot be undermined. But at the same time, the China FinTech is actually evolving. The service model is changing from B2C to B2B2C, because traditional, they just capture the consumer market, but now it's saturated. They're moving up the value chain to capture that corporate layer as well. And then the business model changes, and then banking transformation is taking place in China. And financial deepening, what I'm saying is the financial inclusion. A lot of them is still, even though China's government has successfully lifted people out of poverty, but out of poverty does not mean people are wealthy. There's still people want to borrow money. So financial deepening, meaning that they're encouraging a lot of fintech companies or even banks going out to the remote location to provide financial service to them. And not just Shanghai, Beijing, the big cities already captured. And of course, the market consolidation, internationalization is happening. All this is actually happening. So what does that mean to your offering as a player, let's say a European player? You have to watch out what's going on in the China market, the global market as well, because there's influence to each other. If I say it's a market trend in here on the top, meaning if you know what's going on in Europe or in US, it could happen in China. So that is something that you're going to take note. And when it's going to impact China market. And then you have to understand what is a fintech going, what's the game plan, what are they trying to do. As my earlier slide already indicate that some of them are very active in local market, but some of them are already going overseas. So what is the game plan going outside the market? Then you could go after them. And by the same token, what are the foreign players actually entering the market, like, like the other PayPal and all these companies going into the market? And then you'll find out what is going on, what is the market gap, and what is the things that your company can actually provide service, or European company can provide a service to them. And that takes time and effort to understand. And it cannot be just based on some remote research and then you enter the market immediately. Many companies fail that way. But you really have to understand the market, and then you cannot just bring your own operating model into China and work immediately. Okay, so this is this is my final slide. This just gives you an indication of the different areas in China. Let's say if you want to invest in China, set up your own company, watch out for these different locations. Free trade zones is actually endorsed by the government and all these different cities. The free trade zone have a lot of tax benefit to it. So if you set up your own company, a bank, whatever, you have a lot of tax benefit to it. And also there's some certain free trade zone, there's no even VPN blockage. For example, there's a Chinese Great Firewall in China, right? So they block it, but in the free trade zone, it's actually open up. So there's no blockage at all, right? And even though in China, there are more than 100 million people actually using VPN every day, but but I think the free trade zone just give us some convenience. And then the different cities with different size and what they are made of, or what the service are famous for, I think is actually very important to note. And then the Greater Bay Area is very important. I think this is a big area. Everyone are paying attention in the fintech space, because that is going to become the Silicon Valley in the US. Because if you combine this, the whole GDP is bigger than Australia. It's just, we're talking about just a few sub-region in the Guangdong province. Altogether, this GDP is outgrow Australia. So don't undermine that. So this is my final slide, and I guess we'll open up to Q&A.
Thank you very much, Greg, for giving us insights into the fintech and the developments in the past and towards the future. So now, as you mentioned, we have time for the Q&A. You can either raise your hand and then ask your question directly, or please feel free to use the chat box.